the equity markets are telling us a story that's very positive. In the United States, the NASDAQ hit an all-time high and is up over 3%, is up 13% year to date. The S&P 500 has increased substantially. It's now only down 3.5% for the year, certainly up from the lows that we saw in early March. The markets are telling us that things look good. We are seeing earnings expectations increasing and analyst expectations for companies starting to show positive increases in earnings. What we're seeing is that in times of uncertainty, investors look beyond the next quarter or year or even 2 years at earnings from the equity markets. They're looking at things 3 to 5 years from now because they don't know what exactly is going to happen in the next year to two. And if you look out 3 years plus, you see that COVID should be passed by that time, and it will resume the growth that we saw across the globe and in the United States. But what you'll also see is a focus on those stocks that have done, and those sectors or those themes that are driving the global economy, as you pointed out, doing well. Things like cloud computing, gaming, e-commerce, digital currency, robotics, and healthcare. And you're seeing the markets, you had seen the markets focusing on those names and those sectors prior to COVID. COVID has actually enhanced the focus on those sectors, and those are the ones that we see doing quite well. And as the markets look out 3 years, they'll see those doing well on a continued basis.
Greg, let's spice things up a bit. I'm going to disagree with you intently. You said, and I'll quote, market is saying things look good. Well, I think you're looking like everybody else at all the shiny things at the top of the market, such as the NASDAQ as well. When the things I'm looking at are saying the market is very nuanced at best. In fact, real old economy US is struggling badly, including, dare I say it, the international trade figures yesterday. The Russell 2K, which is 17% off its 52-week high. The Dow Transports, which is an important marker, down 19%. The energy sector down 41%, and financials down 26%. I don't think the market is unambiguously saying to me, things look good. What the market is saying is that there are certain things that look very good and certain things that are going to be impacted not only by COVID, but by the change in technology and innovation that is occurring in the market. You know, traditional finance doesn't look good because traditional finance is an analog business and hasn't moved into the digital age. As we see a move into digital finance, some of the old guard will fall by the wayside, and there will be new players who will take their place. And we see that occurring in many types of analog businesses as there's a transition to our digital future. So vast tranches of the US as it stands now will be redundant, is what you're saying. We will never see that energy independence. We'll never see those energy jobs come back. We won't see those financial jobs come back. We won't see those financial profits come back. Just want to make sure where we're at here, because the industrial sector is a great growth driver in the US as well.
Well, it's not that we might not see them come back. It's that the jobs that currently exist may transition to other jobs. Energy is always going to be needed. We might not have a carbon-based future. We might have more of an alternative-based future with alternative energy. So there will always be a focus on the production of energy. In finance, there will always be a need for finance, an increased need, I would argue. It just won't be through the traditional digital or analog means. It will be driven by digital companies and digital providers in the future. So there'll be a transition of jobs and the way that those jobs are carried out, as there's always been throughout the global economy.